Hey guys, it's Max. How's everybody doing? Let's have an end of the day update here. Market's been closed about 23 minutes. Getting ready to take jacks on a WALK. Let's look at the Altiverse. Is this it? Is this the latest one? Yes, I believe it is. All right. Well, look at this. Well, no, that's not the latest one. Maybe this is it. I think this is it. Okay, this is it. The average constituent in the index is up nearly 1%, 0.98. Alti itself is catching 2/3 of that, or actually catching 78% of that, is up 0.78. Still about 2/3. Alti caught 2/3 of the upside today. That's good. You can see the only stocks in the Altiverse that were hurting it was Tesla, ELF. Everything else was looking nice, which is great to see. Let's check out the index buffer report. All right, in index land, we have XFAL killing it. Or wait, yeah, XFAL killing it. So say, well, how's XFAL up today? XFAL and 5E and feet were up and everything else is down. Well, that's wonderful. We'll take it. XFAL is a really good fund. Surprised it doesn't have more assets under management. All right, but everything else is off a little bit. SPY-T down a little bit. T-SPY down a little bit. XDTE down about as much as the index. SVOL down a little bit more than the index. ZVOL, or I'm sorry, okay, we have so many vols. All right, XVOL is up. ZVOL and SVOL are both down. ZVOL and SVOL are both actually, ZVOL's up. Holy cow, it's been a great day for the vol. So we got ZVOL and XVOL up, SVOL down. AIPI having a good day, as is Triple QY, as is YMAX, as is Alti. Look at Alti's leading the board really well. Now Alti's almost leading. If it wasn't for ZVOL, Alti would be sweeping the board, and that's good to see. Boy, that is really good to see. I mean, that is awesome. Come on, Alti. IWMY looking really nice also. USOY having a really good day. Great day for Defiance. Clip pulling back, as is KQQQ. All right, so let's do some single stock buffers. Tesla's having a bad day, so is Tesla. Apple's having a bad day, so is Apple. But look, AMZ, which I'm proud to say is in my portfolio, is up and is beating the parent. Coney, which is not in there, is doing well. Murni finally up. NVIDIA doing a great job. I have some NVIDIA. I know a lot of you guys do as well. Look at Misty. Oh my gosh, Misty up 3% and nearly up as much as the parent. YMAX beating the parent, as is ULTY. We've got to love that. Fibby coming close to beating the parent. We have MSFO beating the parent. That's great to see. YBIT getting about 80% of the upside. Sky getting a lot of the upside. GDXY getting a lot of upside. Snowy, a lot of upside. PayPay, PP, whatever, a lot of upside. All right, so let's see what else we can look at. The market kind of slipped today. I was looking at volatility. There's some seasonal weaknesses in the first quarter. Of course, I've been talking about it for weeks now. So last January was kind of rough. I remember a lot of people, we were new to this, and a lot of people panicked and sold. There was a pullback that was really quick, but it blew a lot of people off of Coney. They got out of their Coney positions, and lots of them. But anyway, they came right. But of course, they came right back. That's just these high yield ETFs are just extra volatile because they're paying you such a high dividend. And of course, the dividend comes out of the price. And so it just makes these even more volatile. It's great in an up market, but it adds volatility. And then if you get a pullback, it makes a 10% pullback feel like a 20% pullback. People don't realize that. That's what happened last year. But of course, we were new. Now people know how these funds trade. But so I just wanted to show, we've been talking about this gap from the election night. It's between these two red lines. This is back here where my cursor is November 5th, and then November 6th, we open up here. Well, every time we've been back in the gap, there's been buyers have reemerged. There was buyers, back on December 20th. Now the buyers were there this afternoon too, and they closed outside of the gap. But anyway, still something we're keeping an eye on. Like I always say, we're bullish above, but bearish below this gap. Bullish above this gap. So for right now, for like tomorrow's trading range, we're probably looking for something in this area. Now, if we get above this area, it'd be bullish. And if we get under, of course, if we got under this gap, it'd be bearish. But I did want to show something that's interesting that I missed the other day. So that was S&P. So this is NASDAQ. So NASDAQ, their election night gap is still open. It's way down here, November 5th. Okay. And it's only been, the prices only got back into it once. It got back into it on November 15th and was a mother of all rallies, shot it out of there. Okay. Now we're dealing with, this gap's done. Okay. Now we're dealing, we're in the same situation here, but we have a long way to go before even getting to or the NASDAQ. So what this tells you is NASDAQ is more bullish than S&P on a relative basis. So let's look at the last of the three, which is not Dow. Dow doesn't count anymore, unfortunately. There's Russell, NASDAQ, and S&P. So then we look at the last, which would be Russell. This is making the bearish case because their election night gap, well, the bottom of their election night gap is this red line that I put in here. The top of their election night gap is way up here. I didn't even put it in there, but you can see the top of the gap has gone through. But now we're in a situation on the Russell where they've got on the other side of the gap. This is a bearish look now. And now when we get into the gap, we expect sellers to be there. That's what happened on December 26th. We got into the gap. Sellers were there, sold it back out of the gap. Then this afternoon or this morning, we opened up here and people said, no, we're done with this. So Russell is bearish right now. S&P's neutral, and Q's out of the three is more bullish, just because in relation to just a relative, on a basis of relative strength. Anyway, I thought you guys might be interested in that little gap analysis. All right, guys. Well, that's all I have for you today. I'm going to take the dog for a walk. You have a good one. All right. Oh, one other thing. VIX is still cautious and has been, and I think it's because they know what's going on. So daily VIX, we use the 200-day moving average. When it's above that, we're always cautious. Now, we did get back on. We had a fake out is what sucks. December 24th and then December 26th, we had a brief fake out where it looked like Happy Days were here again, but it was a fake Santa Claus thing. But anyway, ever since the 27th, which was last Friday, of course, we've been back in the bearish camp. And because we're above the 200-day moving average. So we're going to want to see volatility sell off. But right now it's looking like people are putting on hedges, and you can see this chart is trending up. And up's bad when it means putting on hedges, because it means people are defensive. We want this chart to be trending down. We want this chart, we want price to be at the low of this one because it's inverse. Up is bad, down is good on this chart. So anyway, we're going to stay cautious, but, we're going to stay cautious and see what happens. The other side of the equation, though, is it's been above the 200-day moving average pretty much most of the time the second half of the year, and we've had some tremendous rallies. So this volatility indicator has not been the most reliable indicator. So take that with a grain of salt also. All right, or just take that as it may. And also I've erased my graphic again. Oh, well, I do that at least every couple of months. I'll fix it again. All right, you guys have a good one. See ya.